What's up, guys? Today we're going to talk about my GBP JPY trade, a winning trade from yesterday. It was my last trade of the week, my only trade of the week, and I want to use this winning trade to drive home a really important point that I see new traders often overlook. If you're new to the channel, my name is Austin Silver. I appreciate you being here. Do me a favor, if you do find value out of the lessons that we pull from this winning trade, just hit the thumbs up button down below. That helps me reach other traders in the online community and spread my value. Before we get into today's trade recap, I want to remind you guys that we're holding our next free webinar coming up very soon. So hit the link down below. You can sign up, again, totally free, and I want to show you exactly how you can get started trading Forex the right way. So if you take a look really quickly, you can see the P&L above my head. I had two positions. I split my risk between two entries. Neither of them went very far. The first entry I closed as it started to move in my direction, so I felt good to take off a little bit profit. I'm going to explain that to you in a second. But the second position actually ended up getting stopped in profit because I stayed in the trade thinking that it was going to move lower. So let's kind of break this down from start to finish. If we take a look at the 15-minute first. Whoops, let's switch over to this side. Be helpful if I did it right the first time. If we take a look at the 15-minute, you'll see with my purple lines that I have drawn that from the RSI low the day before, it hit about 29.5 on the value. So we know that's oversold. So from the RSI hitting oversold here, moving into the Asian session, we saw price come lower as the RSI came higher. That creates divergence. The divergence was then tested here at about 3:45 into the 4 o'clock New York time, the 4 o'clock hour. That third test of divergence can sometimes signal that if we break the significant level above that, we could see a reversal. Even though that could signal a reversal, I still like to keep my bias based on the higher time frames. And here, we were very short biased. If you take a look at the previous day, you can see the move down during the New York session. If you take a look at the 1 hour chart really quickly, you can see L50 is in the sell zone, EMAs are in a downtrend, so everything here was telling me to be short biased as well. However, with this divergence present on the 15-minute, I had to be cautious, meaning I know I can trade to the divergence line, but I know that price might not necessarily break through that line. It doesn't have to. If anything, because it's bounced once, you should assume that it will bounce again. You should always assume that it'll bounce again until it's broken and verified, signaling to you that it is going to hold underneath with a confirmation test. So when we get the pullback here from 4:45, 5:45, to 6:30, 6:45 in the morning, we get the pullback to the 50 EMA. That's where I get interested to go to the 1 minute to look for the D1 entry. So when we find the divergence on the 1 minute that can now signal a tighter risk reward setup to me, I like to be what I call almost late on these entries. Very, very patient, coming in almost before it falls away and then I miss the entry, because I want to be sure that the level that I'm trading off of is substantial. And it worked out well for me yesterday. If I had gotten in on the first entry signal, which was here at 6 o'clock, it would have stopped me out on this pullback. But because I waited, and even here, I could have gotten in about 10 minutes before I did, and I waited even 10 minutes longer thinking that this was going to be when we finally fell away. Even here, when I thought that I was late, I still could have waited longer because look, it took more time actually to retest the entry price and fall away again. So when it started to push down at about 8:45 into the 9 o'clock hour, that's where I took profit the first time. I then moved my stop loss into profit to make sure I couldn't give back any of the trade. That's what my B and C setups call for. You always want to make sure you put your stop loss in profit because you never know what can happen. So I put the stop into profit, and when it pulled back here, I thought this was going to stop me out. But it didn't. It kept me in, and we fell even lower than we had previous. But what I ignored was the divergence that I have drawn already here, was this falling price but rising RSI on the bottom. That bullish divergence because of this RSI, that should have been the signal to me, especially when it broke the 50 EMA right here at 130.40. That should have been the signal to me that we were going to see this thing head back towards my entry price, and that's when it stopped me out just a few minutes later. So when it came down lower here, I should have been watching it, I think, a little bit more closely to take more profit here. Not just because the 1 minute is bullish, showing bullish divergence, but because it's showing bullish divergence at that same 15-minute significant level here. The 1 minute bullish divergence is here, right above the 15-minute divergence line, which is where we know it can bounce off of. So I managed the trade well to put my stop loss into profit following my rules for B and C setups. but I didn't manage it well enough to pay attention to all of my exit signals to say maybe I should take more profit here. And you saw the P&L, it was a profitable trade, but it definitely could have been managed better. I would have pulled over 1.5%. Instead, I didn't even pull a full 1% on it. So when I make these videos and I talk you guys through my thoughts, I want you to hopefully take something from this and apply it into your trading going forward. Take from me that when you have multiple exit signals or when you have setups that aren't as probable, pay attention to them, because if exit signals start to layer on top of each other, you want to know that and just get out of the trade. Wait for the next one good one. You don't need to marry it and think that it's got to fall and come lower today, because it doesn't. Look what happens to this. It literally pulls all the way back up overnight last night, and then today comes all the way back down through, lower than where I was selling it, and now it's actually blowing through ADR, still falling here at 4:30 on a Friday afternoon. So you never want to assume that you're in the rip. It's not the right way to trade. Read and react, and when exit signals start to layer on top of each other, pay attention to it. So I hope you found some value in the recap here. Tried to keep it short and sweet. Do me a favor, like I said to you already, make sure you're signed up. The link is below for the free webinar next week. I don't want you guys to miss that. And check out the website too. Our new website just got redone. I appreciate your feedback on that. Everybody seems to love it. So check that out. Any comments, questions, concerns on this trade, drop them in the comments to this video, and I'll see you guys on the webinar next week or in the next trade video.